Welcome to this YouTube channel. In this video we are going to talk about the top 5 cryptocurrency to invest in 2021. So before starting this video, like this video, and subscribe to our YouTube channel for future updates. Cryptocurrency is a type of money that only exists in digital form. Cryptocurrency can be used to make online purchases without going through a middleman, like a bank, or it can be saved as an investment. Cryptocurrencies are becoming increasingly popular and well known. Part of this is due to the astronomical rise in the value of some of those coins. While it is possible to invest in cryptocurrencies, they are very different from typical investments such as equities. When you buy stock, you're purchasing a share of a company's ownership, which gives you the right to vote on the company's direction. You may be entitled to compensation if that company goes bankrupt, and its creditors are reimbursed from its liquidated assets. The top 5 cryptocurrencies on the verge of explosion, best cryptocurrency to invest in 2021. Number 5. Polkadot. Polkadot is a one-of-a-kind proof-of-stake coin aimed at bringing blockchain interoperability to the masses. Its protocol connects permissioned and permissionless blockchains, as well as oracles, allowing systems to interact in a single environment. Gavin Wood, Thiel Fellow Robert Habermeyer, and Peter Charbon designed Polkadot. Gavin Wood is a co-founder and former chief technology officer of the Ethereum project. Polkadot has a market capitalization of $30.3 billion as of March 2021, and one DOT is worth $32.83. Polkadot allows an internet where independent blockchains can share information and transactions in a trustless way via the Polkadot relay chain. Polkadot's goal is to make it easier to create and link decentralized apps, utilities, and organizations. Polkadot's technology is expected to aid in the decentralization of the web, a notion pioneered by Dr. Wood and dubbed Web 3.0. Substrate, a framework for quickly building your own blockchains, and the Canary, Kusama network, which is independent of Polkadot but runs on early, unaudited versions of the same software, as a proving ground for bleeding-edge technologies, were the next breakthroughs that followed Polkadot. Number 4. Cardano, ADA. Cardano is a cryptocurrency network and open-source project aiming to build a public blockchain platform for smart contracts. Cardano's internal coin is called ADA. A co-founder of Ethereum and BitShares, Charles Hoskinson, began developing the platform in 2015 and published it in 2017. One of Ethereum's 5 initial founding members, Charles Hoskinson, was a co-founder of the project. He departed Ethereum after various issues with its direction, eventually assisting in the development of Cardano. At 9:36 a.m., the non-profit digital currency ADA was trading at $1.19 on March 29 with a market worth of $40.4 billion. In contrast to Bitcoin and Ethereum, which employ proof-of-work protocols, Cardano uses the Ouroboros proof-of-stake system. Proof-of-stake blockchains consume much less energy than proof-of-work blockchains. Hoskinson projected the Cardano network needed 6 gigawatt-hours yearly in February 2021, less than 0.01% of the 110.53 terawatt-hours estimated by the University of Cambridge for the Bitcoin network. In 2021, Cardano is expected to be the largest proof-of-stake cryptocurrency. ADA is a cryptocurrency that exists on the Cardano platform settlement layer. This layer keeps track of transactions in the same way as Bitcoin does. The computation layer is the second layer. This layer, like Ethereum's, allows smart contracts and apps to execute on the platform. Developers may run end-to-end tests on their programs using Cardano's smart contract language without leaving the integrated development environment or deploying their code. Number 3. Tether USDT. Tether, formerly known as Realcoin, was one of the first cryptocurrencies to be tied to the US dollar when it was introduced in 2014. Tether is a blockchain-based cryptocurrency whose crypto tokens are backed by an equal amount of traditional fiat currencies, such as the dollar, euro, or Japanese yen, held in a specified bank account. Tether is a stablecoin, a type of cryptocurrency that tries to keep cryptocurrency prices stable, as opposed to the huge price volatility witnessed in other popular cryptocurrencies such as Bitcoin and Ethereum. Tether, with a total market capitalization of $24.4 billion and a per-token value of $1, was the third largest cryptocurrency by market capitalization in January 2021. Because of the company's alleged participation in influencing the price of Bitcoin, an ambiguous relationship with the Bitfinex exchange, and the company's inability to perform a promised audit. Demonstrating enough reserves supporting the Tether token, Tether Limited and the Tether cryptocurrency are divisive. Most crypto foundations have a long-term banking relationship, but Tether appears to have had trouble doing so. Tether's price fell to a low of 90 cents on October 15, 2018, amid reports that investors are losing faith in the cryptocurrency. Bloomberg reported on November 20, 2018, that federal prosecutors in the United States are examining whether Tether was used to manipulate the price of Bitcoin. Tether outperformed Bitcoin in terms of daily and monthly trading volume in 2019, having the largest daily and monthly trading volume of any cryptocurrency on the market. There are 62.7 billion USDT in circulation as of June 2021. Number 2. Ethereum, ETH. Ethereum is a decentralized software platform that enables the creation and execution of smart contracts and decentralized applications, dApps, without the need for third-party downtime, theft, control, or intervention. Ethereum is a permissionless, non-hierarchical network of computers, nodes, that generate and reach consensus on an ever-growing chain of blocks or batches of transactions, known as the blockchain. Ether is the platform's native cryptocurrency, ETH. In terms of market valuation, it is the second largest cryptocurrency behind Bitcoin. Ethereum was proposed by Vitalik Buterin, a programmer, in 2013. After being crowdfunded in 2014, the network went live on July 30, 2015, with an initial quantity of 72 million tokens. Ethereum is used for decentralized finance, non-fungible tokens, NFTs, generation and trading, and several initial coin offerings, ICOs. On March 29, 2021, the coin market capitalization was $195.54 billion. Ethereum is supposed to be low-cost, open and adaptable, as well as suitable for multi-party collaboration. Ethereum performs similarly to a distributed ledger in terms of data coordination, but its architecture also includes unique layers that improve and expand the capabilities of commercial systems. For those interested in learning more about the various functions, our protocol business architect Brent Zhu has written a two-part comparison of blockchain versus distributed ledger technology. Any item that has been registered in a digital format can be tokenized on Ethereum. Organizations can fractionalize formerly monolithic assets, real estate, broaden their product line, provably rare art, and open new incentive models by tokenizing assets, crowdsourced data management. Number 1. Bitcoin BTC. Bitcoin is a cryptocurrency that was founded in 2008 by Satoshi Nakamoto, an unidentified individual or group of people. Bitcoin is a decentralized digital money that may be sent directly from one user to another on the peer-to-peer Bitcoin network. There is no single administrator or central bank. Cryptography is used by network nodes to validate transactions, which are ultimately recorded in a blockchain, a public distributed ledger. Regardless of whether its price rises or decreases, Bitcoin will continue to dominate the cryptocurrency market. Traders will gain from strong liquidity as long as it exists, regardless of market stability. Bitcoin has a continuous rising tendency, despite its unpredictability. BTC, as it is called by its market ticker, is the most popular cryptocurrency, with a market valuation of $1.01 trillion. It was created as a way to facilitate decentralized transactions, as well as a means of storing value. For many users, the primary attraction of Bitcoin, and indeed one of the central concepts of cryptocurrencies in general, is autonomy. Digital currencies, at least in principle, provide consumers more control over their money than fiat currencies. Users have complete choice over how they spend their money without having to interact with a middleman such as a bank or the government. Bitcoin transactions are private. Unless a user willingly exposes his Bitcoin transactions, his purchases are never associated with his personal identifier, and cannot be traced back to him, much like cash-only purchases. In fact, the anonymous Bitcoin address that is generated for each transaction by the user varies. This isn't to suggest that Bitcoin transactions are completely anonymous or untraceable, but they are far less easily connected to personal identifier than other forms of payment. Fees and currency expenses are common in standard wire transfers and international transactions. The expenses of dealing are kept low, since Bitcoin transactions do not involve any intermediary institutions or governments. This can be a significant benefit for travelers. Furthermore, every Bitcoin transfer is extremely fast, removing the annoyance of conventional authorization formalities and wait times. Bitcoin is theoretically available to populations who do not have access to traditional banking systems, credit cards, or other forms of payment because users can send and receive Bitcoins using only a smartphone or computer. What do you think about this video? Do let us know down in the comment section below. If you enjoyed this video and want to hear from us again, be sure to hit that subscribe button before you go.